We have seen deleveraging across, specifically starting in Asia Pacific. We have not seen that in the US, honestly, with our wealth clients. On the institutional sides, maybe a bit. It really depends, Jeff. You know, everybody is kind of waiting and seeing, looking for the opportunities here. Markets change so quickly every day. There's three main factors here that cause things to be less predictable. First is the war. Is there going to be a ceasefire at a certain moment in time, as a consequence of which the pressure on commodities will actually be going down? Second, the supply chains on the back of the pandemic are still not in order, they're still not functioning, still having that inflationary effect. Third, labor markets that are under pressure as well. So there is just three of these uncertainties causing inflation to go up. How will central bank react? They will try to manage this down. Will it be successful continuing with growth, or will we go into a recession? You tell me. For us, it is really important. Stay close to your clients, advise them, stay close to the market participants, provide them with the liquidity when they need it.
Obviously, interest rate trends are rising at this point. And obviously, there are some advantages in terms of net interest margins and how some other products trade, and clients try and get ahead of that. The ECB, though, seems to be the laggard in the pack at the moment. Yeah. Could I just ask you to express an opinion as to whether you feel the ECB is getting a long way behind the curve now and needs to react? And if it doesn't, what the consequences are for you?
Well, I think the ECB will closely look at what the Fed is doing, right? And the Fed is ahead of the ECB, but also a bit late, let's be honest. So the ECB is a little bit late as well because they don't want to kind of be faster than the Fed there. They first want to finish their asset repurchase program and only then start hiking. So we do expect that there will be a first hike in rates towards the end of the year on the ECB side. And the ECB has to manage a very diverse geography in terms of economic developments, right? So you see the North always very quickly under pressure because they're doing very well. The South needing a little bit more leeway in order to keep things going. So it's not a straightforward solution for the ECB. It's not a straightforward decision for them to make because they have all these different data points from different parts in Europe. But yeah, they're a little bit late, and I do think they, given the threat that is there from an inflation perspective, as well as that going back into either stagflation or recession, they could move a bit faster.
The IMF has just warned on stagflation in Asia. Obviously, you are showing in your numbers the impact of the zero-COVID strategy in China on client activity. Yeah. As long as China's wedded to this zero-COVID policy, do you see any reason for that client activity to turn around?
Yes, I do, because I do think that next to COVID, there is these other factors, like the uncertainty coming through the war, like the election of Xi Jinping, the re-election of Xi Jinping, that could lift some of that and give more positive outlooks also for China and Asia. I do think that in China itself, the common prosperity policy is one that plays to our strength in terms of asset management and wealth management. It's a better division of wealth in that country. So for our business, that could be good. And I do think that if, with time, and with some of these uncertainties being cleared up, I do think demand will come back.
Okay, let's ask you about Russia because you have been very clear about your exposure. Could you just give us a here and now update? How do you expect to see that exposure change? And what is your intention with regard to the Russian market? A full exit?
So we haven't been doing any new business since the invasion with Russian domiciled clients. The activities support our clients to de-risk. We are using the activities ourselves to de-risk, but no new business is being done. So basically that gives you the answer as to what the future of our activities is right there. The risk position has been managed down very quickly to some 400 million direct exposure. That will decrease with transactions coming to fruition. So in that exposure at this moment is some nostro exposure, there is some trade exposure there, and with these trade transactions coming to liquidity event, they will repay, and then the exposure will automatically decrease. So we're watching it very carefully. I'm watching it even very carefully, but we're not worried about that.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.